In this video, we're going to run through the 7 habits of wealthy traders, including, guys, 3 from us. So we're going to kick things off with 3 from us. But stick around because coming up at the end of this video, we're going to give you habits from the best of the best. Warren Buffett, Michael Burry, to name a few, coming up at the end. But there's a look at what is to come to kick things off. Let's jump into number 1, guys. The first habit of wealthy traders. Go ahead.
We'll start with me. We're not going to start with the famous guys there. We'll leave that to the end. But look, the first thing I always say is know where you are wrong in any trade or any investment before you commit capital towards it, right? So what I simply mean is, you can say that you want to get into something, and I'll use an example of a bad trade here. Like, let's just say Tesla, a tremendous move to the upside when it tested 900 post-split. But let's say you liked this little cluster here when it made a high, consolidated, looks like it could be breaking out again. Before you consider, I want to buy Tesla at 840, the thing I would ask myself is, am I buying and holding forever? If this is going to be like an upward momentum trade where I understand I could be wrong, what is going to be my out? And if I can't identify that out, I would not get into the trade. Whether or not it's going to be something really technical, like back to this 800 level, that bottom there, or whether you want to attach it to a moving average and say, okay, we close below this moving average and I'm covering it in front of 700 on that particular day. Once you've at least done that, you now are accountable to something, right? So you have a target in mind. When it gets to that price, you have a rule that you know you should be covering the position, or it could be a trend break, anything. It could be a piece of news, a news catalyst that goes one way or the other, a delivery number, target, whatever it is. It gives you something that you're accountable to and helps you to control your losses. If I can't identify that, I don't get in. Simple. Know where you're wrong and then go from there.
And number 2 is going to be my tip for you guys, and it is, be patient. Let the market come to you. We have a couple of examples here, and what I basically mean by this is you don't have to jump in front of your idea, right? You can get into an idea, think about something you like, look at the stock, the charts, figure out, is this the right time to get in, right? So kind of like what Neil was talking about. But let's look to the right spot to get in, not where you're going to get out. And I think here I have a good example, and we talked about this on the show. So practicing as we preach here, this is Simon Property Group. And of course, they're a major mall, for commercials and everything like that. They're a mall holder, lender out of retail space. Look at Simon Property Group. So here we go. I mean, it's sad, obviously, what happened in March of 2020 there with COVID. We knew the malls, the retail were in some trouble. At Simon Property Group, for myself, I'm a blue chip investor. This is one of the best of the best, pays a dividend. But you see here, I was not in this name. It falls all the way back down. And instead of, trying to worry about picking these bottoms, I know I like the name. I know it's a strong dividend. So even through here, you're watching it. We're trying to come out of COVID, and it rips all the way up here. It retraces almost halfway back. Look, I've missed the boat. I was not involved in this because we were waiting. It was very, very nerve-wracking. But when it comes back into this area, now you build a bottom. So, you can put a little line here and find the right support spot for this name. So Simon Property Group founded at about 60, and you wait for this to come back in. So here's the big move. We can't predict that. If you're stuck up here, you're stuck up here. But then where do you average in, right? Let the stock come down to you and don't get in right away. We're not sure what's going to happen with COVID. We're not sure what's going to happen with the pandemic. Let it fade around a little bit. And then when it comes back into this area a second time, sure, it doesn't get this low, but you could start to pick up your trade right here. So don't get too excited. As this is happening, let it fall down, make a base, and then find an area to get into. So I like to call them, this is consolidation. Find an area of consolidation. Be patient. Let your stock come into you. Even if you've missed it on this first move, let it fall back into you. There's always going to be opportunities to buy good names. So be patient. Let the trade come to you. That is number 2.
2 excellent points to kick things off. I'm going to give you number 3 here, guys. We're going to talk about confidence and how important it is for traders, regardless of your experience level, to be confident in what you're doing. And the way you gain confidence as a trader is by tracking your results, keeping accurate results and accurate records of your trading that over time will direct you towards trades that are paying you. We're all here to be paid from trading and by the market. So if you have accurate records and keep accurate results, that builds confidence and allows you to expand strategies. I'm going to show you a quick example here of just a basic trading spreadsheet, and I mean, this doesn't have to be anything near what you are using, but any kind of spreadsheet where you can, enter a symbol, enter the amount of shares you took, enter where you got in, where your stop was, where your target is, and then what the result of that trade will over time show you right to your face whether or not this strategy is in fact profitable, and give you that confidence that is so important to go forward and move to the next level with your trading. So number 3, make sure you're keeping accurate records. Let's move on. We're going to get into, as we said, some of the big guns, guys, some of the habits and some of the possible traits that we can adapt to our own from some of the most important and popular investors that are out there.
Absolutely. We promised you one from the miracle of from the Oracle of Omaha himself, Warren Buffett. And I have it actually up right here so you can see a picture of Mr. Buffett himself. Look, I'm not going to read the second half here. Widespread fear is your friend as an investor because it serves up bargain purchases. Now that is going to be the key, and that's one of those things that people say, like when other people are fearful, you should be greedy. That's another quote you might hear as well from Warren Buffett, and all of that simply means, because I don't need to dwell on it here, but you did have COVID putting a hamper on the economy, but Boeing had both the 737 MAX issues, and then of course you had the drop in demand from COVID. And the thing about it is, because it had that double dip of news, it had some trouble getting off the ground, even in the midst of the recovery. It kept having all of these tough pullbacks, and people were starting to doubt like whether or not it was going to be breaking back towards those highs, like so much of the rest of the economy did. And you take those opportunities if you like the company, if you understand it, to be a buyer. If you are convicted in something that, hey, all the fundamentals are good, when everyone else is scared about it, that's your best opportunity. And when, despite all the positive signs in Boeing that we did see that it should recover, it was still languishing a little bit longer than a lot of people expected. So if you're convicted, you could catch some of those bottoms. Quote from the Oracle of Omaha himself.
Okay, next one, we're going to talk about Michael Burry right here, and I have a quote for him we can show you directly here. I try to buy shares. We all know Michael Burry here, famous for the housing crash, which is going to be a little bit opposite of this, but that's where we know him from, and especially now with Tesla too going short. But I try to buy shares, right? So we do know him to go short, but we're talking about investing here. I try to buy shares of unpopular companies when they look like roadkill. So it is very, very similar to what Neil was talking about there with Warren Buffett, but he's a little bit of a newer cat into this game. So Warren Buffett, more talking about some of the older names. We're going to look here, and then, when they've been polished up a bit. Okay, so looking for names possibly with new management, right? So we have Wayfair here. I want to do another example now that I think about it, which is an even better name than this, okay? I'm going to go over to AMC, all right? And now the thing about it is, sure, AMC is going to be a meme stock, everything like that. But let's go back over. We can find that quote one more time, right? Buy shares when they've been polished up a bit. That's what I want to focus on. And AMC, we know they got new management, okay? They talked about the form of their business, new management coming through, raising capital, changing the business a little bit, even in GameStop as well, right? Bringing in new people into GameStop. Look what's happened to the GameStop shares. I mean, this is another thing, right? These are left for dead, like Warren Buffett, but then there's a change. There's a change in management. There's a change in business model. That's when you want to try to strike. Now, these are crazy, crazy moves. This is not going to be, a typical investment, but that's what you're looking for, right? Michael Cohen, founder there with Chewy, went over to AMC, went over to GameStop. Trader owners, management, big top. They create moves, right? So that was one name there for Michael Burry. So another one, that's tip number 5. Number 6, we're going to go right over to Bill Ackman, okay? And this is one that I think is more important, probably the most important, to be honest with you, out of all of these. And we're all suffer from this, and it's emotion, okay? You have to make sure that you're vesting without emotion, right? Where you have to purely rational and not let your emotion affect your decision making, just the facts, okay? So Bill Ackman is very, very famous for Herbalife. He defended that position. He was talking about the facts, about the pyramid scheme, so on and so forth. He defended it, and basically went to the grave with that. It turned out well for him, but he was on many stations defending HLF. The chart's not going to go back that far, but it's still around. The stock is still great, defending defending everything that he believes in, guys. That's going to be Bill Ackman right there. So emotion, keep your emotions away from your investment decisions. I mean, these guys are wealthy for a reason, right? Look at facts. It goes back to what Brendan said. Keep notes, record take. Make sure that why you're in a trade is because it deserves to be in there, right? Understand that. The next point, which is going to be the very last one, guys, point number 7 here, coming from us. And I've thrown it out here. It's one that we talk about all the time on the show. We give out our watch lists. I give out the sticky note. And the reason why I still have Bill Ackman up here is because he talks about it here yourself. You need to make sound judgment about picking your stock. It's the exact same quote. Only possible when you do the right research, okay? Don't invest in something that you have no idea what it is, okay? Like I like to sports gamble. And I've used the website, so getting into a DraftKings position makes sense to me. I understand the business. I understand what it means to be, an online gambler, what kind of effects that can have, not only to, personally, but the kind of emotions that you feel when you're gambling and sort of where the revenue stream comes from for DraftKings. So again, that's a name that I like to be in. It doesn't matter what the chart looks like, but again, invest in things that you know. Therefore, when somebody stops you on the street and asks you, hey, why do you like a position that you have? Why do you like DraftKings? Why don't you like this stock? Understand that all of your holdings, you should be able to justify. You should be able to justify why you're in those trades and why you like it. If you can't do that, then you shouldn't be in the name. So that's the last tip there for wealthy investors.
Such a key point and a great look at a number of ideas and concepts that you too can adapt into your own trading and understand, why you're getting into the market and how you're getting into the market, and then the end result a little bit better of how you're approaching the market. So hope you like that, guys. The 7 key habits of wealthy investors. Let's go to Valeria.
Hey guys, thank you for sharing this useful information. Dear viewers, please subscribe to this channel to see more great videos.